Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, July 30th, 2025. It's 12:36 p.m. Eastern Time as I'm starting the video. We're about halfway through the trading session, and here's what I'm going to do in no particular order. I'm going to go through the order. What I like to do time to time is just catch up on the comment sections under the most recent posts. Some good questions there, and in that, I'm going to go over some charts. Share my thoughts on things, and just kind of share what I think is relevant right now. First and foremost, just to reiterate, not to be the dead horse here, but this is by far the biggest week in recent memory as far as potential market movers. Again, asterisk there with the word potential. Just because something has a potential to be a big market mover doesn't mean it necessarily will be. But with that being said, you've got the likes of Apple, Amazon, Meta. Who else is it? At least four of the giant big tech companies today and tomorrow. Of course, after the close, big tech typically reports after the close. And there's also a litany of other, potentially, things that most other stocks aren't going to move the market like those. The big four that are reporting this week. On top of that, you have GDP tomorrow. You have later, I think on Thursday, employment data numbers come out. You have the Fed meeting today, FOMC announcement. Now, we know they're not going to change rates, but again, it's not about what they do. Market prices that part in. Fed futures show you a near certainty of no rate change, but it's about what Powell says. That has, again, the potential to move the market one way or the other. And also things that are impacted by the dollar. I'm going to get to that in this video, namely gold and Bitcoin. Okay. Then you have August 1st, which is Friday, being the deadline for the countries that haven't yet negotiated trade terms with the U.S. As we all know, there's a big acronym out there, the taco trade. Trump always chickens out. It is my guess that Trump, with an ego the size of Texas, he doesn't like that moniker that's been assigned to him. He's made that clear. And with a big ego, I wouldn't be surprised if he didn't back down this time around. So we'll see. And again, those are all potential market movers. It's going to take us into the end of the week. Remember, the end of the week is also going to affect how the weekly charts print the candles. I'm waiting to see there. We have some trend indicators that could flip over bullish or bearish. And more important, the monthly charts. Now, the monthly charts obviously are going to finish print tomorrow at the close on July 31st. However, with the weekly charts and everything I just mentioned, remember, whatever the monthly charts are going to reflect the close Thursday 4 p.m. That's not going to include Apple and Amazon, who report Thursday night, nor will it include whatever does or doesn't happen before the August 1st deadlines on the tariffs. So let's wait and see how this week goes. I believe it has the potential to really give us some insight or some clues whether the rally is going to continue into next week and going forward, might have some staying power, or is this going to be the catalyst that finally causes the divergences and things like that are priced into the charts to result in a trend reversal. So, all right, let's dive in here. Okay, I had to pause it there briefly for a phone call. Start with this one here. If the odds after the 200s were reclaimed, what was the go for marginal new high? How come the tone hasn't been to hold for new highs? The tone seems to be more wait for a shorting up than hold long until there's a reason to sell. So I went ahead and answered that. And here's my thoughts, my reply. So as I highlighted at the time and many times since, quite often, probably more often than not, when the stock market, the 200-day moving averages do a great job of delineating bull and bear trends when the markets are below or above them, above being bullish. And typically once you're above, pullbacks to the 200 get bought, and it keeps the trend going. That's where you want to buy if you get that opportunity. Likewise, once you take them out, usually a bull trend has ended and you're in a bearish trend. All bear markets have been defined by that. And typically, I've highlighted many times, and go back to 07, 08, 09. You can see all the rallies back, including the one that we had last year in 2022, perfect objective shorting ops. And now, so that's that. Now, however, with that being said, I've also highlighted many times, it's more than common to when you're testing the 200s from above or below to overshoot them, and by a relatively small amount. Relative is relative to the scope of the move, the preceding move, but usually within 5%, give or take, something like there. Sometimes, usually somewhere in that range or less. And it could be sometimes a one-day overshoot up to a few weeks, and that's usually what you get, and then may fall back down. So my point was, it's not binary. As I said at the time, no more shorts for the long-term swing shorts. We had a couple swing trade triggers for short-term trades, but as far as the long-term shorts go, that was back then at the time, no more adding, but not an immediate flip to long for that reason. And it comes down to picking up nickels in front of a steamroller, because my view was and remains that if taken out, marginal new high was certainly in the realm of probabilities. Anything's possible, so I speak in probabilities, not possibilities. We've gotten that right now. We have a marginal new, ever so slightly high. For example, the S&P 500 equal weighted has not made a new high. It's made an equal high. It's testing the previous highs. The regular market cap weighted S&P has made a marginal new, meaning relatively slight high, still divergent high, and I still expect it to fail. So to me, the RR is just not attractive. However, and I also went on to say, and I'm doing this now to tell you next week. So if we get through this week, and the market likes what the big the Mag 4 are selling this week, the 4 big tech stocks reporting, and it likes what Trump or whatever happens on the trade agreements come Friday with the deadline or another extension, and it likes the employment data and GDP tomorrow. Oh no, GDP was today. If it likes everything and continues on, then next week I'm going to continue hunting for the same type of trades I've been looking at. So I made this clear, and I'm just going over, not cherry picking, just looking at the last couple weeks, last few months, the longs, and I made it very clear that I'm comfortable with are good, typically not always good quality names, but typically good quality blue chip names, established companies. And so we had the likes, I mentioned Pepsi, for example. Here, I'll pull these up. So Pepsi, we bought, and this is my trading style too, guys. It's, I won't buy the indexes for a swing or trend trade right now. I have no targets. When you break to new highs, there's not any resistance levels. So there's nothing to really objectively price target. You want to ride it up, go long QQQ or SPY, set a stop loss and let it run. It's hard to say how far it goes. Again, I think the upside is minimal compared to the downside risk of especially of a sudden swoon down. So lately, I've been buying these quality names. We hit this one here, 13% profit. Bought the bottom almost with impunity, sold the high, and then you look where it is, and this is what I'll do. We don't always, just like the markets. We shorted from the highs earlier this year, covered at the lows. I made that very clear in videos and in the comments and the morning thereof. No more shorting, no more shorts for me. All longs, going long. This thing's done. We're going to have a bounce about at least 13%, and that's what we got. And so that's, we milked about half the move up on that run, and that's it. Sometimes you can milk them all, like Pepsi. This is Pepsi now. There's where we exited. T3, we had the downtrend line, and it's gone nowhere. Now I want to say that Pepsi, the reason that was the final target and is we're overbought. So Pepsi, for example, might be revisited. This may be another a whole new long trade. That was the final target, time to get out. We had multiple confluence of resistance. The 200-day moving averages, which I'm highlighting here in the blue and red lines. You have the downtrend line right there. You have price resistance, and we're very overbought. So here's an example of a stock that still is a lot closer to a 52 or multi-year low than a multi-year high. And should it pull back and work off these overbought conditions and provide an objective entry, maybe come down to, I'd love to see it down back to T1. And I think that the broad market is going to hold up, at least for the time being, then this would be another new trade idea, and or on a breakout above that downtrend line, and then head for these higher potential targets, resistance levels there, up there about 160, 174. And so these are the kind of trades, again, that I've been highlighting. And by the way, we've absolutely blown away, just on the long trades, the performance of since in the last couple, especially since we exited the index trades, gaming that, first initial leg up. These have had infinitely higher returns than the broad market. There's not a lot of them because I'm not seeing a lot of stocks I'm comfortable with. The other ones being Churchill Downs. Let's do that one. We did that one. Again, with impunity, we bought right here, right at almost perfectly at the lows. And we hit our third target there. And you can see again, look at this. These are just mean reversion trades coming back to the 200s. T3 wasn't a randomly arbitrary place level. It was price resistance, the 200s. And again, overbought near term. That was CHDN. And this is where you want to exit. You hit the 200s in that T3, you've pulled back. This one also may be an objective entry if it comes back down to this trend line in T2. Again, if the market holds up. If not, which I suspect, these are just bear market rally trades, and they'll probably go down again. But right now, these are closed out trades. I don't see an objective entry now. May revisit these later. Let's go to the rest of those. Lululemon I want to highlight because part of this video, I don't want to just say, here's what we do now. But I'm trying to share the insight, some insight to my trading style. So here's another one. This is still an active trade. So this one we bought back, I believe it was on this breakout of this downtrend line off that divergent low. We hit my first target. If you go into the FAQ page on right side of the chart under resources, you'll see the reason why I list multiple targets, because upon the initial tag of each target, a reaction is likely. And that's what happened. So we hit T1, we pulled back, and we made a ever so slightly marginal new, but still very much divergent low. The divergence is extended. So I still like this one. They're going to report soon. Here's your earnings coming up in a couple weeks there, early September. And the way it works is if we rally up, we've already hit T1, so that should open the door to T2, T3, and maybe this potential T4 right there. If you don't want to be this, if you want to be the second mouse who gets the cheese, in other words, the stock is clearly in a downtrend, just made a new multi-year low, then you can wait for a break above this trend line there, and that would be your entry. But remember, the closer you get to earnings, the higher a chance any breakout has to fail. Earnings, of course, the stock can go either way. All right, so a couple more, and then I'm going to get to some of the other questions. And then we had Verve too. This one was based also on fundamentals, but also bought off, multi-year low. And when I first shared this one, it was based on, there was a fundamental catalyst, but I'll never take a stock solely on fundamentals, have to make a technical case. We're coming off this big divergent low, and we made, 190% on that one from where we entered. So again, and that's because it exceeded T3, my final target, because there was a buyout. And I got that out to you in pre-market. Exit that now. The stock has exceeded that. And the way that works is if you had a position, you had a standing stop loss order at 906, that's where it would have filled, well, whatever the stock opened, unless you had it marked in the to fill outside the regular trading hour, or you could have just changed out your order and cashed out there. And again, because it wasn't going to go any higher because it exceeded the buyout price there. All right, so those again are the level of the type of trades I just wanted to say that I've been sharing and will share going forward, unless this market rolls over, doesn't like what's being sold to it this week, and then you're going to see more short trades coming out. So let's go back to, all right, that post. At the end of the day, look, in hindsight, I wish I would have bought the breakout above the 200s. When we did gap above them, sure, if I would have just thrown in, but nobody bats 1,000, not even close. So it doesn't bother me. We milked, again, a good part of that. And then migrated over to individual stock picking, which is, again, vastly outperforming the markets. And I say that because I get very few comments on the individual stock trades. A lot of folks like talking about the market. All right, Kevin shared this this chart. You can go in there to yesterday's post, and it shows seasonality on Bitcoin. And so what I did last night, I kind of jumped the gun. In my head mentally, where I was already in August, so I compared, if you want to see it, the seasonality. It still meshes with what I was going for here. Hold on, let me go back. Let me show you what I posted here. Again, you can come in and read this. Here it is. So I did September. Now this still meshes. Remember, I just called for a major bottom in the dollar, major trend reversal. The dollar has been clearly in a downtrend in the last couple of months, a month or two. I started about a month ago highlighting it at long-term support. So far, it's held that support. It's actually double tested it. We had the initial rally, and the dollar still looks good. I'm going to get that in a second. And the point of me covering it in this video is it impacts two things, gold and Bitcoin. As I pointed out to you a little bit back, let's see if I can pull that chart. I think I had it ready to go right here. So I had noticed and pointed out to you back in the beginning of July, this is dated July 8th, this very clear trend. This is the big trends. The green is US dollar. You can pause this video if you want to look at it or reference the chart. I've already posted this on the site and covered a few different times. All the major trends in the dollar have a clear and unmistakable inverse correlation to Bitcoin. There are periods, just like gold, where there's a disconnect when there's overwhelming supply or demand. But in the end of the day, it's the same premise that makes gold and the US dollar have an inverse correlation, because when the dollar is weakening, it takes more dollars to buy an ounce of gold. Therefore, the price of gold is going to go up if you freeze supply and demand. And when you look back long enough, go 10, 20 years, you will see that relationship. It's unmistakable. And so I'll get to the dollar in a second. Wanted to share that chart and just share with you what Kevin had posted. I took it a step further. What I posted last night was comparing the September returns. I'm going to show you the August returns. But remember, calling this bottom in the dollar, I'm not calling for a bounce. I'm calling for a trend reversal in the dollar. And so that should carry through in August and September. And you can see here, September, what I did, these columns, I took, this is a chart of the US dollar, but I cut and pasted. This is Bitcoin right here. So September, first and foremost, and thank you again, Kevin, for pointing this out, aligns with, well, he pointed out in Bitcoin. I changed the chart to look at the dollar, and this supports what I see. You can see September is typically, you have more green days there, and positive. Historically, the dollar goes up in September. And now, and if you think this is mere coincidence, I'll just read the odds out for you. You can look at the chart. So in September, the US dollar, the number of times that the US dollar was up and Bitcoin was down was 8 times. Whereas the number of times the US dollar was up and Bitcoin went up as well was only 2 times. So those are very, very strong highlights the correlation. You can see it here, the green meaning the dollar is up, and you can see red meaning Bitcoin's dropping. So, and I did it for you with August as well. Let me pull that up 1 second. Okay, here it is. So we're coming into August. So what I did again, I put US dollar right here in this column. And then to the right, we were on the chart of Bitcoin. So this is Bitcoin. And so let's just go through it quickly. Again, you can pause the video and verify these right here. I should pick a different color. I'm gonna get a box tool, change up my color. There we go. So typically, again, the US dollar in August is bullish and Bitcoin is bearish. And you can see, and remember guys, the thing about short selling, calling for a correction in Bitcoin, first of all, everybody's bullish Bitcoin now. It's going up. Trump is crypto friendly, blah, blah, blah. All the reasons which in my opinion have long since been priced in. Trump didn't get elected yesterday. And he didn't become, start running his mouth and becoming a crypto fan yesterday either. We all know that. So this is old news. The $1 million question, how much of it's priced in already? Only time will tell, but we can go off the charts and try to get a clue. So Bitcoin, again, has been in one of the most, it's a relatively new asset, and it's been in it mostly goes up just like the stock market. So as I always say, if you're bullish in a bull market, you can be the worst market timer in the world. You could be buying all the highs at the worst time. Hold long enough, you're going to get bailed out. Short sellers, especially if they're shorting something in a bull trend, need to be precise with their timing. So when you look at this, keep in mind that Bitcoin 99% of the time, or 90 something percent of the time, look at the monthly stats, has gone up. So, but you can see there's 2 months. The average is these 2 months it goes down. Again, Kevin, thank you for pointing this out. But it just meshes with what I've already highlighted, that if I'm right, and that's the $1 million if, there's two components here. First of all, if I'm wrong on the dollar goes down, especially down big instead of up, then okay, that whole call is wrong, and therefore the associated call on short and bearish gold, GDX, silver, and Bitcoin, that's also going to be wrong, or not. It's not going to be a thing, right? Does that make sense? So we'll get to the dollar in a second. Here's August. Again, US dollar right here. Dollar was down, Bitcoin was down. But here we had two big, good, and you can see green, big months. Darker green means bigger rallies. That's how they color code it here. The darker the color. And remember, currencies don't move much in percentage terms. So those are big moves in the dollar. And those are two of the biggest down days you've seen in a long time in crypto, in Bitcoin. Another green month, you did have a snapback rally. Remember, this is when this thing first started correcting after a huge bull run up. So you're going to get the initial rallies. Everyone's going to come and buy the dip. So that's what you got. Then the dollar dropped. So, and that keeps the correlation. So this was the only time the correlation so far wasn't there. And this one, correlation was there. Inverse correlation. Green, red, green, red, green, red, red, green, right? Dollar down. And then you had even a bigger bear market rally, or counter trend rally. And so that keeps the correlation going. Green, red, red, red. So that one didn't count. But you can see green, big red month, green, the green there, red, green. So more, you do the statistics and the probability, and it's more than just, a random coincidence. Most of the time, the dollar, especially the trends, and again, I already showed you that on the other chart overlaying the two, and I showed you that really kicked in September as well. Once, as I often talk about, guys, and when I'm trading gold or Bitcoin or any other asset that's correlated as an inverse correlation, I can assure you, I don't know what the number is, but I guarantee you the vast majority, especially of retail traders, don't factor in what the dollar is doing when they want to buy gold or GDX. They buy it because somebody on CNBC told them, or they think whatever their analysis tells them. But as you know, I put a very strong weighting on what the dollar is doing to assets that have a very well documented correlation with it, whether it's positive or inverse, right? In the dollar, as I said, gold and Bitcoin, that's not my crazy convoluted theory. That's fact. The falling dollar then causes prices to go up because you're pricing one unit, one Bitcoin, or 1 ounce of gold in dollars. And now you can see, so we broke out of the bullish falling wedge. You guys know I've covered this quite a bit. Had an initial leg up, little corrective wave, and now the dollar continues to go up. And so the longer this continues, you get some of the best trades, what I call a kind of a game of catch up. So if this continues to go up, and if we take out my first and then my second, hit my second price target, or even go up more, along the way here, the market will quote unquote gold, silver, GDX, and Bitcoin will quote unquote get the memo. And so the longer this happens, again, and the market ignores that, typically, not always, but typically, the greater the correction is, or the game of catch up, where Bitcoin, gold will start to realize, wow, the dollar's really, this isn't just, some people see this as noise. This is my interpretation of the charts. I've stated the reason for the trend reversal on this major support here, 2690, the base of that trading range. And so that's that. So I wanted to cover that. Let's move on. And then as far as timing goes, of course, you got to have, you don't just short Bitcoin or gold based on the fact the dollar is bouncing or rallying. You want to also make a case. And so there's your uptrend line on IBIT, the main. This is kind of the go-to. There's a lot of ETFs out there, but this is one of the more liquid ones of the newer iteration. The real ETFs that came out started trading in the beginning of 2024. GBTC is not technically an ETF. It's an ETF-like instrument. It trades, I believe, at discounted premium to the net asset value, more like a closed-end fund. All right, so there's what you need to watch. You've got a little sideways consolidation here. A little upside would just extend this divergence if it happens anytime soon. So you want to look for a break of that. And then a big level, I have it in green. That would be a big failure back below 61.50-ish on IBIT. Okay, next up. All right, let's get back to this. All right, I did enough coverage of Bitcoin. And question from Kevin about does a single candle top on IBIT and GBTC mean anything? I've talked on this on the past. On the stock market, I absolutely put a high weighting on candlestick patterns, bullish or bearish candlestick patterns, because there's just most of the trading is done in regular session. There are a lot of commodities, natural gas and crude oil that trade around the clock and see a lot of volume in the futures. Gold, even big hedge funds will use gold, GLD, the ETF, in lieu of gold futures. So gold, I'll put a bigger weighting on. At the end of the day, I like to see both of them. If I'm going to go long or short something that has an ETF that trades as well as futures, and those are usually commodities. Obviously on the stock indexes, you have futures. I already addressed that. Commodities usually have futures, and then they have an ETN or ETF variant that'll track. And the ETF or ETN on like crude oil, natural gas, they're just buying the futures. That's how they're tracking it. So I like to make a case. In other words, an example would be if USO, the crude ETN, breaks an uptrend line, but I look in CL, crude futures, at the very same time it's currently on its comparable uptrend line but hasn't broken it, I'm not going to hold off. I want to see crude futures break down too, because what happens is CL, crude future buyers, may step in, buy that, pull back to the trend line, rally it, and then the USO, which does a good but not perfect job of tracking because they have more expenses. So I like to watch both, guys, and make a case long. I want to make sure if I'm going to go long or short a commodity or anything that tracks both, is traded with both futures and ETFs, I want to see them both confirm. Everybody's calling for a top in all equity Bitcoin markets. Yeah, everybody. Most people are bullish. The sentiment indicators tell us that, and same thing with Bitcoin, I think. This is okay. Herman Munster asks about DRV. That's the REIT ETN. I'm going to share two things. I'm going to go to the charts real quick. I have some thoughts on this. When trading, first of all, be very careful with leverage, especially 3-time leverage ETFs. I have a whole write-up about it, how the math works, when you want to use them, when they're actually better than the non-leverage. But it's you need to understand what the underlying is and what your expectation is for the underlying, meaning the sector itself. And then there are times that I will use those 3-time leverage, and there's times I will avoid them. And mainly you want a unidirectional trend. Unidirectional means most up days or down days. It's when you get eaten alive, even if you're early and not wrong in these little consolidation periods, the leverage is going to eat you alive. So that's number one as far as trading them. Number two, even if I'm going to trade them, I'll always use the one-time ETF or the actual sector for charting purposes, because of the same very reason I write up about this in the FAQ page, because of the decay over time. When you look at these things here, I'll just give you a real world example. IYR has been around forever. You can also use XLRE. That's the S&P Spiders real estate ETF, but this one's been around. This was first to market, IYR. And, if you go back, I've been trading this thing for years. It came out in the 90s, late 90s, and that's why. So it's my go-to one. It's been around for a while. And you can see over time, REITs go up, you make money. Now let's do DRV or DRN. What is it? DRV, and then I think, DRN is the bullish one. So you would think with 300% leverage, you'd be up a whole lot more. But this thing has just gone, you can see since it came out in 2009, if you bought it there, you're up about 500%. Um, it, it really kind of moves around. You're going to have that decay. So you're up about 350% in the non-leverage IYR. So 3 times 350 is taking about 1,000%. So you can see the gross underperformance there of holding that 3-time leverage, even in a bull market, even if you're right on the call. So always chart with these, because the decay will also distort the charts, even if you want to trade the other one. So, okay, now to my take. I'm going to use the weekly charts here, because I don't have a vary on the daily. I don't have a strong read on the REITs right now, but I want to address this fact too, and this is important. When it comes to certain things, gold miners come to mind. Birds of a feather flock together. They're all doing the same thing, this similar business model. They're, GDX is going to hold miners at different places of the world, but they're pulling gold out of the ground. They're selling it on the open market. Global prices are, give or take the same everywhere. They all have, when energy prices go up, their biggest cost are labor, and then energy behind that, fuel, diesel for the machines, electricity to, process and mine the gold. So you have similar business models, very similar against all the components of GDX, right? IYR is very different. I compare it to the biotechs. One biotech company might have a single drug in the pipeline for MS, and the other next biotech company might have 5 drugs in the pipeline or on market for completely different disease states. So their business models, although they're technically all biotechs, they have, in many cases, completely different financials as well as fundamental outlooks based on their drug pipeline, both in current in market and in clinical trials. REITs are the same way. So you have to understand that some REITs, you have healthcare REITs, for example, your medical offices. You go to your doctors, they're in a big medical complex or hospital. Those kind of REITs, they tend to be more recession proof, and people keep, when you get sick in a recession, you still go to the doctor. But then things like retail REITs and office REITs, and you have residential REITs, apartment complexes. So there's all different types in there. And again, so when you go through to look at the individual components, you really want to understand what's their market. So this was this is a daily chart. I guess, as you can see, I haven't covered IYR in a long time. This was our last, the last trade I see on here. I give you we must have shorted right here. I would have gave you 4 targets. We never hit my max stop, and we went on, hit the final target, ever so slightly overshot it there. And this is when I like to see, here was a divergent low, there was a rally. Right now, all I can tell you on the daily, we have some negative divergence there, but this thing's been grinding around. I don't have a strong opinion, but I would point you to this weekly chart here. Again, I'm doing this just for requests, not so much, you can take it if you want it. There's a big symmetrical triangle pattern. Nice price resistance right here. Upside break, that's going to be bullish. Ultimately, a downside break, especially break of 76, is going to be bearish. When I go through the individual components, as you can see, AMT on the weekly, I don't have much of a read or an opinion. Well, getting a little stretch, negative divergence, break of this trend line is probably going to send the stock lower. Again, just look for these divergent highs. Not many divergent lows in these stocks. Some just don't put them in when they bottom. They just, especially these REITs, they just bottom out on oversold conditions. So that's that one. PLD, there's your uptrend line, symmetrical triangle. So symmetrical triangle patterns are typically indecision patterns. And, this doesn't look like much right here, but it was a 70% drop off that divergent high. And now we have big negative divergence on EQIX. And there's price support, so break of that, it's going to be bearish. And this one already broke the trend line right here. DLR, okay, I'm not going to go through them all. Simon Property Group, divergence. Again, some look better than others. Big symmetrical triangle pattern on O, which is the Realty Income Corp. All right, PSA, you saw my trend line. I think I stopped marking them up there. Okay, so that's that. I don't have a strong opinion. I would just tell you to know the components, maybe pick a subsector or individual stocks, especially, and there's a case where I wouldn't have DRN or DRV, the bull or bear version, the 3-time, because the charts to me look like it's kind of go nowhere sector. I don't see an explosive big unidirectional bull or bear market coming in the REITs. And so over time, this is, holding this one, you're going to just have that decay, the simple mathematics on the 3-time leverage on something that goes up and down. It's about your daily closes. Again, I highly encourage you to read up on that on the click on resources like I just did on the top menu. Go here, FAQ, frequently asked questions, and get to here, ETF related questions. And then this one right here, is there a disadvantage for holding an ETF or ETP for an extended period of time? The math is in there. You'll understand exactly how those work and when you want to hold them and when you don't. Okay, and to wrap it up, I'm just going to give you a couple other trade things on my radar. NVO, Novo Nordisk, big down day today. When I look at the weekly chart, I've had this trend line here forever and a day. Right here, this trend line you can see I created back in 2023. It's a long-term primary uptrend line. Bingo, hit, and a nice price support. So this one I like here, down to, but not below, meaning you can hold it and then a stop somewhat below for a bottom pick. Positive divergence. This is the maker of Wegovy and Ozempic. They've had their struggles. Just appointed a new CEO today. And so there it is. This thing is off the highs. Retail wanted to chase it there during the Ozempic craze. It's down almost 70%, again, at primary uptrend line support with price support just below about 47. So it's a buy from here, from about $50, 50 and change, 51 down to 47 or so, with a stop somewhat below. Somewhat is relative. This isn't a quick swing trade. This is a bottom picking play. Stock you could probably tuck away, again, unless we're in a going to see a big bear market, a vicious bear market, which I still think there's a good chance. Then in that case, either way, it's right now looks good. Right now we're in a bull market. So if that changes, then you can just set your stops, maybe tighten them up, and then there are some stocks that will go up in a bear market. This is one of the better looking ones. These are the kind of stocks, again, that I've been sharing lately with you and will continue to share until my comfort level. I wouldn't buy NVIDIA with your money right now. That doesn't say NVIDIA can't go up another 40, 50, 100%. It's not my kind of chart. It's not my style. This right now is, these are the type of stocks that I like, and you're going to get more of these from me. Etsy is already an active trade. I gave that to you late last year. I can't type today. Okay. This is my weekly chart. I meant to pull the daily, but beautiful little bullish falling wedge pattern. I like Etsy. I've been buying more and more on there in recent years. Kind of the Amazon of like niche, cooler, better quality, individual, craftsmen, crafted products, from sellers that, actually make stuff, in their own art studio instead of, some stuff comes from China, of course, but a lot of it's made. You guys, if you know Etsy, you know Etsy. And again, this is another one, that kind of stock. We bought it somewhere here. We hit my first target on it. It was, again, I threw it out to you last year. We broke the trend line, hit T1, hit first target zone, pulled back, made a marginal new but still divergent low. And I just showed you it's constructive on all fronts. Price support right there. It's moving up. We're back to the T1 level. So if you took this one before, or if you didn't, if you passed on it or you weren't with right side of the chart back then, a break above that level, remember, I expect an initial reaction on the tag, upon the initial tag of each target, a reaction's likely. It was a pretty decent reaction. We hit it again. So before we even got there, if I thought we were going to pull back, and we did pull back, and then we hit it again and pulled back one more time, and now we're there again, that tells me it further, all that does, there are no guarantees to anything, but I guarantee you it is more valid of a resistance level now. If I figured it would be resistance there because of what I saw back here, and we had a pullback, that's a reaction. That validates it. That's another reaction. And we hit it again and just pulled back recently. Now we're punching through. So voila, boom. This should open the door. We do have some negative divergence. Earnings, they just reported. Okay, good. We're out of the way earnings. That's it, guys. All clear for T2, 3, 4, 5, 6. Just giving you an update. That's still an active trade. And what else do I have for you? I already covered, didn't I cover Lululemon? Yeah, KMX, CarMax. Okay, I'm going to give you my thoughts on it. Potential positive divergence, not confirmed. I want to see that PPO curl up. I put some targets here. There's support there, but when I look at the weekly and I look at the other dealers, CarMax, I think CarMax is going lower. I'm sorry, Carvana. This is CarMax. I'm just going to tell you this one has nice support here. It's a support range. So it is objective here at about 59.50 down to about 55.44 with a stop somewhat below. On the bearish side, it took out this uptrend line there and it's been moving lower. So I'm not crazy about it. If it can reverse and the market holds up, yeah, there's big resistance, nice potential target. I'm sharing an idea. At least it's beat down. It's more oversold than overbought, like a lot of stocks. And just wanted to share that one with you. So I'm not taking a position in this one yet. I might. And next week, I'm going to be, like I said, if the market holds up and my comfort level's there, I'll continue to share more trade ideas, long and short. So we're going to stop it here. I'm taking the rest of the day off, and I'll be back tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.